Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Morning.
Starting a new week, third one for 2023, and we get into the thick of the earnings season this month, right?
Absolutely, we do. And there's so much data, right, as we kickstart trade this morning. There's the earnings from the weekend, HDFC Bank, Avenue Supermarts. There's Reliance that comes out on Friday. Yeah. So a lot to track this week.
And it was a good weekend, actually, right? India kicked off the Hockey World Cup, our campaign out there. Yesterday, we drew against England, but we won against Spain, so pretty good. India did well in the cricketing game yesterday. And Sonia, you'll be happy. Last night, Arsenal came out trumps yet again, 2-0 up, so we're on top of the table.
Oh, a good weekend for sport, a good weekend for the markets. So let's see. And we have a pretty long week. Reliance wraps up on Friday, which is going to be sort of an extended evening. So lots to talk about.
Absolutely. And, one hopes that for the market also, it's not going to be too bad. So let's just quickly kind of take you through what the setup is looking like this morning, right? Now, let me just put out a table which explains what we've seen in 2023 so far, the first 2 full weeks of 23 so far. This is something that I put out on Friday post-market hours. So just starting with that, this explains the near-term 2-week underperformance of India versus some of the other regional markets. The second column is FII flows. So India is sharply negative. Other markets have taken in a lot of money. And the third one is dollar returns. India is up about 0.9%. The other markets are up a lot more. Now, of course, we've been talking about this. We've been discussing this, why this may be so. Maybe China reopening at the margin, underperforming markets getting a little bit of reallocation. Is this tactical in nature? It looks like so far nothing untoward at all. And maybe at some point, some of the more structural, longer-term drivers start to kick in. But this has been the story so far. How are things looking as we begin a new week, right? Now, the global setup is positive. I think that's the base kind of scenario. The Nasdaq was up about 0.75%. And the US, by the way, has been slowly creeping up 0.5%, 0.75% over the last many trading sessions. So that's the Nasdaq change for you. The dollar index remains extremely well behaved. It's at about 102, and that's exactly the way emerging markets want it. Actually, it's down to 101.85, right? So that's great news. Oil prices have moved up, and at the margin, I'm seeing increasingly people who track oil and oil markets calling for the fact that maybe this lull in the oil markets on the way down is perhaps over. So Brent's moved up to about $85 and we'll talk more about that. Ideally, you want both dollar index and the oil prices to be lower, but you basically have got a situation where one is down and the other is up a little bit. Last week, the Nifty and the Bank Nifty both, let's start with the Nifty. The Nifty had a positive daily and a positive weekly close as well. On Friday morning, I was making this point that what you need on Friday is a solid, good close. That's what you want. We got that off the highs, of course, but it was 0.5% higher for the week, a little over 0.5% on the day. So that's good. Now, the swing low, which we made on just 2 days before at 17,761, when we broke the December lows of 17,774, the new low is 17,761, that becomes important, imperative that the market holds on to that and doesn't give that. It's not very far away, but on Friday we managed to put some distance, but let's hope we kind of build on that. So it's imperative that kind of is held. The immediate resistance is the 20-day moving average on the Nifty, which stands at about 18,077. And I think we're at 17,956 at close on Friday, so about 160 odd points away is where the 20-day moving average starts to kick in. For the Bank Nifty, again, the recent swing low of 41,729, I think, which was made on Wednesday or Tuesday or Wednesday, that is important on the way down. Again, important that is held. On the way up on the Bank Nifty, the 20-day moving average stands at 42,683. So again, the 20 on both the Nifty and the Bank Nifty becomes important to take out. And that, I think, adds a touch of confidence as we go into this week. The thing is, as you can see, the SGX Nifty is indicating a slightly higher start, mildly higher start. There's a lot of news flow, individual large stock-related news flow, which has got to be absorbed. And that, I think, more than anything else at this stage, determines where the market goes from here. Things like HDFC Bank and others, I think, will matter a great deal. In terms of a great broad direction for the market, there isn't one. It's a little bit of a muddle through as we've had. And I think that remains over the next 1 or 2 weeks as well. The budget, by the way, is exactly 2 weeks out as well. Guys, hi.
Oh, absolutely. And you pointed out a couple of local cues, right? I mean, this morning, the SGX Nifty is indicating that the start will be mildly in the green.
Yeah.
I'm watching for a lot of the result reactions, and HDFC Bank would top that list. Very good set of numbers coming through. Strong NII growth for HDFC Bank. The loan growth was almost 20%, led by a 30% growth in the retail book and in the rural book as well. So, except for corporate, the retail rural book has seen a very strong growth this time around. And, the net interest income up almost 24.6 odd %. Only the agri slippages was something that was a bit of a concern, over 6,000 crores. But stripped of that, it was a good set of numbers from HDFC Bank. For Avenue Supermarts, the margin weakness continues. On the flip side, although HDFC Bank was good, Avenue Supermarts and Wipro delivered a weak set of numbers. In fact, for Wipro, it was the lowest revenue growth amongst its peers, just about 0.6% growth. So I'm watching out for that. But it's a big week of earnings. You have, of course, Reliance that comes out with numbers on Friday. But through the course of the week, today you have, Federal Bank that comes out with numbers. On Wednesday, there's Bank of India. On Thursday, there's Persistent. On Friday, you have not just Reliance, there's Asian Paints as well. And then you top it off with ICICI Bank on Saturday. So 30% of the Nifty constituents will be reporting their earnings in this week. So in that context, very important week. Global cues are positive as well. The handover has been good. The Nasdaq has seen its best week since November. And the Nifty, Prashant was pointing out some important levels. I think this December low of 17,774, we tested it once last week. We held on to it by the end of the week. So it's an important support level for the market. By and large, it's the line in the sand on the downside. So watch out for that. FIs, though, continue to sell. Once again, they've sold on Friday, and it's a total of almost 24,000 crores, relentless selling for 16 straight sessions. So I guess today the market will, of course, hold on to the December lows, but so many macro and micro cues through the week. So I guess, the market will have to navigate that.
Well, that's right, Sonia. And in Friday's trading session, the Nifty almost went to around that 18,000 odd mark. We went there for a smidge, and then, in fact, it quickly got sold into. So let's see whether or not that 18,000 odd mark can be conquered by the bulls. The big question is HDFC Bank, that can be in good form today, going by the numbers. So can it help the Nifty Bank as well as the Nifty move towards that 20 DMA? That's the question for me. HDFC Bank's performance is going to be quite important today because it's the large weight on the index. And valuation-wise, it's not trading as expensive as it was maybe a couple of years or so ago because it's been a relative underperformer. The buy zone for the bulls on the Nifty is at around that 17,750 to around 17,800. And I pulled up a couple of instances just in the last 20 sessions or so. We go towards those levels, and then on that day itself, you get a good bounce. So that's clearly the buy zone. What did the FIs do, in the F&O market on Friday? The Nifty did well. The Nifty Bank outperformed actually on Friday. So on the long side, well, there was some long addition. Close on 6,000 contracts were added. On the short side, there was some covering. More than 10,000 contracts were covered out. And the short positioning now is at around 57%. It's come down from around that 60 to 63% odd. So some part of the short covering has played out, but yet they continue to remain net short. So there is some good news that comes about, and that's what could cause a bigger short covering bounce that could come about. On the option side, they're not giving any big direction. But you're looking at the overall options picture, the 17,900 put, the 17,800 put. Well, between them, there was close to around 75 lakh shares getting added there. And there were clearly some visible signs of writing out there. But on the Nifty Bank, which bounced in the last few sessions, well, out there as well, you did see that the open interest was up 16 lakh shares odd, which is rather large, and the premiums around 170 rupees. So the guess is that there is some writing being seen out there, which brings us to the levels. The Nifty, 18,100 becomes a resistance zone, closer around that 20 DMA of around 18,080. The Nifty Bank as well, that's closer to around the 20 DMA. The 42,650 to around 42,750. So 650 to 750. That's because the 20 and the 50 DMA is in that vicinity. So just keep an eye out on that mark. For me, on a closing basis, you want the Nifty to protect that 100 DMA. It conquered that in Friday's trading session. Well, you like it to trade about those levels. SGX Nifty suggesting a green start, 25-point up. I think at some point of time, you'll get a bit of a pullback. So looking to buy closer to around, the flattish line or maybe closer around the 100 DMA will become important. So let's see how that plays out, Sonia.
Okay, well, lots of big macro cues as well, through the course of the week. So I thought I'll just put some of that data in front of you. Today, you have the WPI data for India that comes out for the month of December. So we'll track that very closely. Tomorrow, there's the UK unemployment rate that comes out. There's a China Q4 GDP as well. And on Wednesday, you have the Bank of Japan rate decision along with the US retail sales. So lots to talk about in terms of cues. And the US futures are also higher after a good close that we had on Friday. So, along with a positive handover, perhaps given that the US futures are also higher, we could see some green on the screen today.
Possible that we are able to build on it. Let's keep our fingers crossed. Well, before we start, let's tell you what's lined up here in the first half hour of the show. We'll get you updates from markets across the globe, and Dean Kim of William O'Neill and Company will join us to discuss the global setup as he sees it. Our research team, as always, brings you CNBC-TV18's list of